Hello students, I am Paresh Sirsat, Associate Professor, Jnanprasarak Mandal's College and Research Center, Asagaon. This is module number 7, Computation of Income from House Property. In this module, we will discuss provisions of section 25A, section 26 and section 27, that is recovery of unrealized rent, section 26 co-owned properties and deemed owners. After watching this video, you should be able to explain or you will understand the provisions of section 25A, 26 and section 27. Now, unrealized rent received subsequently, this is covered under section 25A. The amount of unrealized rent received in arrears or the amount of unrealized rent realized subsequently shall be charged to tax in the previous year in which such rent is received or realized. The additional points to be remembered here is arrears of rent is chargeable as income in the year in which it is recovered, even if the assessee is not owning that property in that year. He might have sold out that property, but if you recover the unrealized rent or arrears of rent, it is taxable in that year, even if you are not the owner of the property. Remember, for computing income under the head income from house property, the assessee should be the owner of property. But here in this case, even if he is not the owner in the year in which he recovered, it is considered as income of that year. And the recipient can claim deduction to the extent of 30% of the rent realized from the amount realized. No other deduction is allowed. It may so happen that to recover the unrealized rent, you may spend more amount or you may not spend any amount. Now, irrespective of what you spend, you get a flat standard deduction of 30% from rent recovered. It is covered under section 25A. Now, let us see one illustration of section 25A. Mr. Joy received during January 2020 unrealized rent of rupees 3 lakhs from a defaulting tenant as per court orders. Rent pertains to year 2014-15. However, Mr. Joy had sold that house property during 17-18 and he had incurred legal expense of rupees 50,000 on the said suit. You have to compute the income taxable in the year 2020-21 when you recover this rent, and it is told you that his loss from self occupied property is rupees 1 lakh. Now, if you see here, the unrealized rent recovered is rupees 3 lakhs. From that, you have to give standard deduction of rupees 90,000, that is 30% of unrealized rent. It works out to be 2 lakhs 10,000. Now, this is your income. 2 lakhs 10,000 is the income from unrealized rent. Add to that income from self occupied property. Even though I said add, you have to minus it because it is negative income. Income from self occupied property can be 0 or the negative. It is never positive because it is a deduction on account of interest on borrowed capital. So, the taxable income is 1 lakh 10,000. Please keep in mind, there is no other deduction on account of expenses are allowed in case of unrealized rent. No other deduction. Even if you do not incur any expenditure, you can claim deduction on account of standard deduction, that is 30% of the amount recovered. Next is section 26, property owned by co-owners. Co-owners means one property is owned by more than one owner. If the house property and the land appertaining thereto is owned by 2 or more persons and the respective share of each owner is definite and ascertainable, the income from such house property shall be included in the total income of such person. That means it will be added to that person's income. Now, if suppose the co-owned property is self-occupied, suppose there are 2 brothers and both brothers are staying in the same building, maybe one on the ground floor and one on the first floor, it is one house. Even then, each owner will get the benefit of self occupied property. Even if house is 1, it will be divided into 2 and each owner will get the benefit of self occupied property. Third section is deemed owner, section 27. Now deemed owner means here the assessee is not the registered owner of the property. Even then he will be treated as deemed owner of the property and he will have to pay tax on that property. Now let us see the situations when he will be treated as deemed owner of the property. Section 27 provides that the following person shall be treated as deemed owner of the property. The first, spouse not being transferred in connection with an agreement to live apart, or a minor child not being married daughter if property is transferred without adequate monetary consideration. These are the legal terms. I will explain in simple words. Suppose a property is transferred to a spouse, maybe husband is transferring property to the wife or wife is transferring to a husband without any adequate consideration, or a property is transferred to a minor child not being married daughter, or in case of spouse not under an agreement to live apart. In that case the transferor will be the deemed owner of the property. Even if there is a conveyance deed transferring the property in the name of a spouse or a minor child, the legal owner becomes a spouse or a minor child, but the deemed owner for income tax purpose will be the transferor, the person who is transferring that property. Second, holder of impartiable estate. I will explain this with the help of an example. Suppose a person is having 3 sons and he distributes the property in the name of to all these 3 sons, but the family convention, let us say, of that family is that the ancestral house is always the person, the elder son stays in the ancestral house and it is not dividable, it cannot be divided, and any person, any brothers or sisters can come and stay there, but it will remain with the elder son. In that case, even though he is not the legal owner of that property, he is just the holder of that property, he becomes the person, the elder son, as per the convention will become the deemed owner of that property. Third, in case of cooperative housing society, company or association of person. See, in case of cooperative society, the property is registered in the name of a society and you become a owner by buying a share of that society, or in case of company or in association of person, even though the member is just the shareholder of the society, he becomes a deemed owner by virtue of buying the share of that cooperative society. So even though the registered owner is the society, the deemed owner for income tax purpose will be the member of that society or the company or a member of AOP, association of persons. The next is, if a property is bought under power of attorney as per section 53A of Transfer of Property Act 1982, the property may be bought in the name of somebody else, but the person who is signing the agreement based on the power of attorney of the original owner, he becomes the deemed owner of the property and not the registered owner. So for income tax purpose, the deemed owner will be the power of attorney holder and not the person in whose name that property is registered. And the last one is, suppose a person acquires a right in respect of any building or part thereof by way of long lease of 12 years or more. If a property is taken on a lease for the period of 12 years or more, then even though that person is not the owner of that property, he becomes deemed owner for the purpose of income tax. But suppose the agreement is renewed every month, or if the agreement is for less than 1 year, for less than 12 months, not exceeding 1 year, and it is renewed, then this is not applicable. Only if the agreement is for a period of 12 years or more, then for income tax purpose that person becomes the deemed owner of the property and he will be charged to tax. These are the references for this topic. Thank you.